Happy Saturday. Awesome.
I think we're so used to assume that we all forget that sometimes we mute ourselves all the time, huh? I do that all the time, Louis.
That's all right.
So, Louis, you've got a hot date?
I just got a hot date with myself, being celebrating African American, Black history.
Where are you headed?
Nowhere tonight. We're at home, man. My wife and I, we're just gonna relax and drink some soup and drink some wine later. That's
Hey,
yeah, it's all good. It's all good.
can't beat that. Can't beat that. See, I have my tea, so
Oh, cool.
taking it easy. So welcome back, everyone. Thank you for joining us on Caribbean Diaspora Vibes. My name is Donna Morgan, and I'm the president of Caribbean American Diaspora Alliance, president of Women of Culture Incorporated, real estate broker at Florida Summer Homes Realty and Life Coach at Intervibes Consultant, among others. We just want to say, happy Black History Month, happy Valentine's, happy Heart Month. There's so many things, for February that we respect. We've got two of our other co-hosts who are not here with us tonight. They are doing their Valentine's Love Weekend. So, we're gonna let them enjoy that. So Louis, how are you doing?
I'm doing well. It's all good. It's good to be here. And I just want to take the time to welcome all our listeners from across the diaspora, from across the Caribbean islands and from across the world that's listening, tuning in. We are glad to be here at the Caribbean Diaspora Vibes this evening. And we're looking forward for a great evening of information about insurance and protection and all that good stuff. Amen.
Yes. Yes, because we realize that it's never, it's a conversation, it's a topic that nobody wants to talk about.
Mm-hmm.
Don't like talking about this topic at any time of the year. You can say, okay, wait, the only time is usually after a death or something like that, where people then start to do the buzz. But a few weeks after, again, nobody wants to mention it. And time after time, we see individuals having to do GoFundMes.
Yes.
Yes. See the fighting between the family members, right?
Mm-hmm.
One person thought that mom or dad or that family member had insurance or had protection, realizing don't. It can cause such a problem between family members for not having this discussion. And so I was just so honored to have Sonja. Is it Sonja or Sonja?
So it's funny, it's Sonja, because I was born and raised in Puerto Rico, and my mom's name is Sonia. So they just did the I a little bit too long. Sonja, there you go. They got creative. What can I tell you?
Sonja.
There you go. Louis got it.
Yes. I love the J, ja in it.
Listen, what can I tell you? I'm telling you, it was the hormones. It was the hormones. I was just born and my mom got creative.
I love it. The Caribbean background. She's like, look, this will work.
Yes.
He's like, we're a mixture of everything, so your name's gonna mix of everything too. And I'm like, why not? Sure.
Thank you. So Sonja will tell us a little bit about who she is. She is with Mutual of Omaha, and it's actually a company that I recently got involved with. And I've always respected Mutual of Omaha, as a life insurance agent, no matter who I was under. Mutual of Omaha was a company that you had to have in your wallet. So, coming across this, I was like, wow, I would love for Sonja to tell us a little bit about Mutual of Omaha. Now, they carry an enormous amount of products, but we're just gonna touch base on a few. So thank you, Sonja, for joining us.
Of course. Thank you so much for having me here today. Really appreciate the time to talk a little bit about the important stuff. I know that you guys were a little bit of chit-chatting about, you know, people doing GoFundMe pages and all that. And it's so true, right? We live in a society where people live paycheck to paycheck, that they don't think about the future and financial situations. So that's why people like us exist, that we can kind of sit down with them. I'll start out by introducing myself. My name is Sonja Savona. I mentioned I was born and raised in Puerto Rico, but I live now in Orlando, Florida, about 8 years ago. I've been working in the financial industry for over 12 years. So I'm a financial advisor. I do life insurance, but I also do investment side as well. And I honestly started working with Mutual of Omaha about 5 years ago. And I'm kind of the same as Donna. I moved over to Mutual of Omaha because of the exact same thing. I think that when you're in this industry, you're always trying to look for the best company that can offer the best products to your client, and diversity as well. And when I say diversity, I'm meaning in product orientation, right? You mentioned it. There's so much to be able to talk about, right? Mutual of Omaha, to talk a little bit about the company, it was founded in 1909. So we've been in business for a while now, for more than 100 years. We're a Fortune 500 company. And when I say that, we're actually the top 200. And we're also known for being a great place to work for, and also diversity as well, right? I think that for me, the most important thing about Mutual of Omaha is that the name kind of says it, mutual. We're a mutualistic company. So mutualistic company means three very important things. The first one is that under the Mutual of Omaha umbrella, you have the insurance side of the world, and you have the investment side of the world. What that means is that you have that one place of service that can guide you and help you in every financial aspect, right? You're not having like 1,000 different people giving you different orientations. It's all under one roof, right? The second thing is we really provide our shareholders, which means every person that buys an insurance policy from us is considered a shareholder, which means you get a vote on what happens with the company, what decisions are made, what products are done. So you can actually say what you believe is good or not, right? And then the last thing is, as the company does better, so does our products do better. And when I say that is, right now I have a life insurance policy, and because we've been performing so well, the costs have gone down. So it helps me as well be able to continue to afford even more and be able to help myself even more in that financial aspect, right? I do want to say a little bit of a tangent on one of the reasons I selected Mutual of Omaha, and Donna, I think that you can probably agree with me on this one, is that we are a company that's recognized for giving back to the community, as well as giving back to just nature in itself, right? Mutual of Omaha was one of the first companies that founded Wild Kingdom, which is a big national TV show that's recognized for how can we really help the environment, help the world to make it a better place, just obviously from a more nature standpoint, but from a community standpoint and how we give back internationally. Obviously, we're part of different associations to help, but within our agency, within Florida, I'll tell you that our managing, just to give you examples, our managing director obviously is part of the board of directors for Keep Tampa Bay Beautiful. So we're going every Saturday to pick up trash, making sure that we can give back. I'm part of directors of the Ronald McDonald's House. My thing are kids. So if I can help, I will help. And I don't want to tell you how much Donna's involved, because I'm already learning about everything she's involved and seeing how much I can participate in there. But we're very big fans of that. So yes, Donna, I went on a rampage. How about?
I love it.
How did that do?
I love it.
Well, you did well.
I talked a little bit about everything within the company, within myself. I just haven't gone to the products, but I went on a little bit of a rampage there.
Yeah, and you know, Sonja, so you know, you're from Puerto Rico. We have a big Caribbean American audience, and I don't know what it is that we still have to really push this to our family and friends, you know, even here in the diaspora, that life insurance is important. And I think it's sometimes too that I hear from, it's like, oh, well, if you talk about life insurance, are you trying to kill me? Are you trying to
100%. It's obviously like, wait, you want me to die? And I'm like, no, that is not the case. I just want you to be prepared for when situations like that happen, that your family's taken care of and they're not having to, as you mentioned, create a GoFundMe page. I'll even add this to you. I think that in the Caribbean, we're so focused. Listen, we get hit by hurricanes more than anybody right now in the world, right? And I think that our mentality regarding insurance has always been so much more on the property and casualty side, right? Of like, I need to make sure my house is protected. I need to make sure my building, my car's protected in case I get hit by this hurricane, everything's set. So I always found it so astonishing that I'm like, how can we how are we making sure that a building is protected? However, us as individuals, we'll worry about that later. Right. It's not important right now. And I'm like, how is that happening, right? How are we giving importance more to a physical building than to ourselves? And that's, I think, where that conversation can go a little bit more too. Because the reality is, it's us first and then the material things. That's the reality.
That is true.
There we go, Lewis. Lewis agrees.
So true. So it is across the board then that, you know, it's just a subject that
people fear. People fear it. People fear the conversation. And people fear the conversation for many different reasons. Obviously, the first one it being, oh my God, you're trying to kill me. But I think that the other fear also has to do with the financial aspect of it too, right? I think that automatically people think it's super expensive. I can't afford that. I don't have the money for it. People automatically also assume, wait, hold up. How is it going to impact me and really help my family? Is it worth it, right? So I think having to have those financial conversations with a third person, with an outside person from your family, can be a little bit uncomfortable. And I think that that's the fear that majority of the people have. But when it comes to having conversations, the most important thing is to just start it, right? It's gradually starts happening. You gradually start opening up. But the important thing is to make sure there's factors in your life that you need to be aware of. And the one is, I don't plan on working for the rest of my life. Hopefully, right? Crossing fingers. And Lewis, are you crossing fingers for me too? Everybody's crossing fingers on this, right? So I need to think about not only what happens when I'm no longer here, but also while I'm here, how am I able to see a light at the end of this tunnel and enjoy my life at some point, and think about retirement as well, right? Because they do go hand in hand. And I think that that's kind of the important thing of when you're starting these conversations.
Yeah, I think for our people, we are, I'm seeing more and more of our people getting into insurance. But it's a far way from where we should be with our people. And it's take education, it show like these, the conversation should be out there in our community. I think insurance agent like yourself, you know, should find churches to have those presentation, community organizations, community meeting where you can educate the massive of the people, or educate the parents, because they're the one who go to these organizations and to these meetings. And eventually, once they start talking about insurance in the home, it will eventually spill to the younger generation that is coming up, because we need that. Just like how we grew up in the island, we don't hear our grandparents, our parents that we grew up with in the islands, they don't talk about money too much. It's the same thing. Money is a hidden thing. Insurance is a hidden thing. So again, it's all about education of our people, why you need insurance. You know, make sure you take care of yourself before you think about the house or whatever the case might be. But I think shows like these will start the conversation in our community.
I couldn't agree with you more, and I'll take it one step further. We've started, when we do our presentations and our meetings with our clients, right? And when we sit down with someone, we're now bringing, I don't want to say requesting, because that's kind of a weird way to say it, but we're asking, hey, if you're married, let's bring your wife on board, right? Or your husband on board. If you have kids, let's bring them on board as well in the conversation that we're having. So it could be an education for the whole entire family. Absolutely. Right? So it can start already from a younger generation. That way, as they continue to grow and continue to get even more educated by this person that's helping either your mom or your dad, right? You're able to now be in a better position as an adult and be like, I need to have this conversation now with someone, as my parents had it too. So I think it's the small details that make a big difference. But I agree, Lois. I think that churches and in the community as a whole needs to get more involved in it in these type of conversations.
Absolutely.
Right, because we know that the congregation listens to the pastor.
Yes, yes.
100%. They're like, wait, what did you say again? Okay, I got it. Let's go.
Right.
Let's go. Yes, 100%. And I think that right now, with the fear of what it means and what it represents, there's so many options out there for people that their minds need to be brought in on, hey, what is available there for me, right? Donna said it jokingly at the beginning of this meeting, but there is so much that you could do that the whole wait, I might not be able to afford it. The whole wait, what is going on? It's not only the education, but the cost has changed as well in it.
And of course, the younger that we get protected,
the better you are. The better you are. It makes a big difference, not only on the value, but of what you're getting as a product, but also the cost, right? As the younger you are, the better in health you are. So obviously it's going to be cheaper for you. The older you are, it starts making a little bit more of a difference on cost because, symptoms come along that might take a little bit of an effect on it. But I think that for us as a community and as a company, the great thing about it is that we have a product for every single person out there, right? Our intention is to genuinely help. So we're not going to shut our doors. It doesn't matter any type of situation. But I agree. The younger you are, the better the situation for you, the earlier you start.
Right. And I know, and I mentioned earlier in a post that parents can get riders for their children, for example, and we'll go through the life insurance, but they can also get a rider because unfortunately, burial for a child is pretty much the same price as an adult, I think.
Yeah, that is true.
It is, and it's insane. I think that if we're going into are we going into products?
Yes, let's go into products.
You're gonna lose me again. You're gonna lose me again in my tangent. I think that when you talk about products and you're talking about what's important and what should be the first conversation that you're having with any type of financial advisor, the top ones have to do obviously with life insurance. That's the basic one, but that's the most important one, right? Life insurance for us comes in so many different ways. The first one is you have a term life, right? Liz, you know what a term life is?
The term of your life.
Love it.
So term life is for a term period of when that policy is active, right? You have a term life for 10 years, a term life for 20, 15, 30. So you're paying for a policy for a certain period of time, right? The good thing about a term life is that obviously you're paying, kind of like Donna mentioned, a little bit more of a final expense scenario in your mentality, right? Because you're paying life insurance, meaning that if something happens to you during that period of time where your policy is active, your family member, your beneficiary, whoever you wrote down, gets a big chunk of money, right? Where they can use that money for themselves to pay for hospital bills, to pay for anything like that, right? The great thing about term life is that after a certain period of years, you can actually do something called convert it. And you can convert it from a term life into a whole life policy, which, Louis, now you can go back to saying
for the rest of my life.
Real life. There you go, Louis. Now we got it. So you can have that for your whole life. This is the great thing about it. So term life, it gives you a great start to be protected in case anything happens. And the cost of it is on the cheaper side. I have a friend of mine who currently has a term life for $500,000 and she's paying $30 a month. And if something happens, her family will get $500,000. Obviously, her intention is that in 5 years, she's going to convert it. But at this moment, she can't pay more than that. And that's perfectly fine. That is her situation at this moment. But at least she's starting off, right? And at least she has something to be able to help her right now. Right?
Awesome.
That's where I first want to start off with.
Right. and for someone like that, Sonja, it's probably a younger person.
Oh, 100%. This person's 20. This person's 25 right now. She's 25 right now. So she's just like, I want to start. I know I need this. So let me start with something at least because I'm healthy. I'm young. It's going to be cheaper for me. And as I convert my policy in 5 years, they're still taking my medical exams when I was 25. I'm not having to do this again when I'm 30 and things can physically be different for me, right? Because I'm converting it. I'm not getting a new policy.
Because we know things can change in a matter of a couple years.
Listen, it could change drastically. I'm the perfect example. I got my first policy when I was 24. And when I was 27, I have a thyroid problem. My thyroid all of a sudden like started getting all messed up. So the cost of my first life insurance that I got to the second one, drastic difference of payments. And it's because of my thyroid. I can't control that, but at least I have my first one, right? I got it that young that it was able to provide that for me, and in a good cost sense, money wise, right? And you can't control that. As we continue to progress when it comes to product orientation, so when we talked about conversion, we talk about whole life products. Mutual of Omaha has one of the best. We call them IULs. And it's an index universal life insurance policy. I can't stress enough how amazing this policy is. And the reason why is because it works as two ways. It works as a life insurance policy, and it also works as a retirement account to a certain level. Why? An IUL, and it goes back to when I first started talking, we are a mutualistic company. Yay for being mutualistic. An IUL, you have your life insurance for whatever amount you got it for, but every single year as the company continues to perform correctly and above standard, accumulates dividends and interest within the policy. So that means that you're not only having your premium, but you have a cash value as well within the policy. So you have two buckets basically of money, right? The amazing thing about this accumulation that you have is that you're able to take that money out in case emergency situations occur in life, which happens every day. True or false, Louis?
Absolutely.
Happens every day.
Which you can't do with the term. So most people don't.
There you go.
Yeah.
There you go.
This is
A
only
term,
whole life, right?
a term is just for your life, right? Until that period of time and that amount of money. And in an IUL, now you have that accumulation going into it. That's a policy that's for the rest of your life, and it continues to accumulate money for you every single year.
So you can only get the IUL with the old life. Am I correct?
So IUL and whole life, I want to make this very clear in case there's a little bit of a confusion. IUL and whole life, they're two different policies, but they're two permanent policies. What that means is that, as you mentioned, Louis, it's for the rest of your life. They're two different ones, but for the rest of your life. Whole life is very similar to IUL in the sense of it accumulates dividends, right? It accumulates dividends, but the factors of how it accumulates dividends work differently. So that's why IUL in a mutualistic company like Mutual of Omaha, in accumulation might work better for you.
Got you. So
throwing that in there.
I can say to
Might
you,
work better.
so if I say to you, I need an IUL policy, am I getting the same similar coverage like the old policy and plus interest occurring on it?
Boom. You got it.
Got it. Okay.
There you go. You got it. That's exactly it. You're getting the insurance life, whatever money you get if something happens to you, plus that interest accumulated, right?
Permanent coverage, as long as you pay.
Yes.
Important factor, Donna. Important factor, as long as you continue to pay for your policy, right? But yes, you're absolutely correct with us on that aspect. And I think that people don't really understand that. Listen, you're getting two things for the same type of price, right? You're able to help your family while you're also helping yourself, because you can take that money out, that interest accumulated for anything. So it's like you're having your own little savings account.
Exactly. And is there a term or a limit in terms of when you can start get that cash, or when you're qualified to get that cash out? Is there an age, 10 years, 5 years? So
that is a great question. And no, the answer is no in the sense of age. Obviously, you do have to wait more than a year, because there's no money in it if less than a year, right? It has to accumulate for a whole entire year. There's nothing to take out. But after a year, you're good.
Okay.
Louis is taking notes, Donna. I don't know if you're-
And Louis, you would be getting a summary or portfolio to see you have access
Right.
where your money's at, et cetera, so you can,
Actually, you get a statement to your house every 3 months, a quarterly statement to your house sent to you, being like, this is how much you've accumulated already. This is how much you have. This is how much you're protected for. So it keeps you a little bit on track. You have online access to your account every single time, as Donna mentioned as well. Plus, if you have a trusted financial advisor like Donna is, you can just call her and be like, hey, what's going on? Tell me everything. And she can give you break it down for you and tell you everything that's happening for you.
Right.
Right.
And in terms of the age, is there an age limit? Can young people buy into this right away as well? Just like somebody who is 40, 60, or 80 years old. How does that work?
So that's a great question. And the answer is yes and no. Haha, don't hate me for saying that in a confusing way. There is obviously a max limitation on age-wise to where we can offer that product, just because of the risk factor for a company offering that type of product for someone above a certain age. But honestly, the age for an IUL consideration is about almost 80 up. Like honestly, it's 80 and 81 up that you can't offer this type of product. So by that time, we're hoping that people that age already had something, already have something that can help them and guide them. We do have other products that can help that type of generation, and just in case they need any assistance, but the IUL will not be the perfect scenario for them on that one. Right. We do also have a product called $1 Million Baby. So what that offers is for more young ones, for the younger generation, to start kind of saving up and accumulating. And it's insane because it is dirt cheap. Like it's super cheap to get, but it's already setting up your kids for that great experience of being already set up for life. Right. And then they can take control after 18 years old.
Explain that to me. I just got a grandson, so talk to me. Yeah.
He's like, tell me all about it. I want to hear.
Yeah, that $1 Million Baby thing. How does that work?
So we call it $1 Million Baby because come on, it just sounds nice, right?
Yes, I love
It's
that.
a good name for it. But it's the same kind of thing. It is a life insurance policy for newborns, for basically newborns, right? And obviously to a certain age as well. But what it does is that as a parent and as a guardian, you're the one that has access to this policy in the sense of like, because you're the one paying for it. Right. After a certain age, which in this case is 18 years old, then it can be transferred to the actual person, to the kid, right? Whatever your grandson's name is, it could be transferred to him. The amazing thing is by the time that he's 18 years old, he already has value accumulated into it. Right. So could you imagine how much money can be accumulated from here to 18 years?
Right.
You're setting him up for life.
Yeah.
Right? You're literally setting him up for life. And then after that, he can continue to take care of it. Right. So it's not that. And the amazing thing is that the price for it at the beginning.
Yes.
My sister just got one for her newborn and she's literally paying, if I'm not mistaken, and then don't quote me. Oh my God, this is live recorded. Okay. Don't quote me on this one because I don't know the exact price, but if I'm not mistaken, I think it's about almost $8 a month.
Wow.
And you know, when that baby gets to 18, she's gonna got a good chunk of money in there. So she's set for life to a certain way.
Yeah.
Right. The power of accumulation.
Yes.
Accumulation and compounded interest. You have that in there. You have that in there, and it just makes such a huge difference. It's like people don't realize that small amounts of money add up. You're like, oh, what's $1 gonna do? What's $2 gonna do? If you think about it, if it's $1 every single month, plus you have interest coming into it from the investment side, yeah, that can make a big difference, buddy. It can make a big difference for your life.
And Sonja, I know that some people don't want to give that young child access to that money, and they sometimes will put a note like to okay, 23 or 25, because that could be a lot money for that young person, young mindset to just have, because now that's a growth, that's building cash value.
100, yes, and you could do that. If the question is, can you do that? Yes, you can do that. You can be like, wait, hold up. let's not give access 100% to that person just yet. This is for their future. This is for, but the key thing is to remember then that you're also keeping responsibility of the policy, because you're limiting him on having it. So you're keeping the responsibility, which is fine if you're okay with it, right? So that's not a problem. But I think that the great thing about it is that as we continue to say it in this conversation, starting young is the best thing. And that's the perfect example of it.
Right. Is the price for a 20-year-old, a price for a 25, 30, 40, 50, it's going to be a completely different price. So people need to understand that.
100%. And I think people also need to understand, and I want to make sure that people also get the fear factor a little bit out of their heads. Through Mutual of Omaha, we do have policies that are also called Express. And I want to make sure everybody understands that, the difference. So you have what's called fully underwritten policies, which mean that you have to go through a little bit of medical exams, right? We have a nurse that we send out to your home. You don't have to do anything. They do everything for you and we coordinate it for you. They just go directly to you, right? But you have to give blood sample and answer a little bit of questions, and we need to kind of see how you're doing, right? In an Express, guess what? No health questions. No.
Straight to the line, straight to the top.
Yes. Is it a little bit more expensive, Louis? I ain't gonna lie. Yes, it is.
Sure.
Yes, it is. Because the insurance as a company, we're taking a bigger risk because we don't know what's going on, right? We don't know what's happening.
Yes.
So we're taking a bigger risk. But if there's anybody out there, I just wanted to make sure that at least you guys were aware that it does exist. Right? That if there's anybody out there right now that might be like, wait, this might not be for me because of whatever condition or for whatever reason, there are products out there that can still help you. That's
awesome. Do you have something that for college benefits, helping young ones through in the college year? How does that work? And is this different from the $1 Million Baby?
So yes, it is different. There is something called a 529 plan. So we do have that available as well. And that is more on the investment side. And the reason why it's different is for two main things. This is fully in the investment side, which means it's going against mutual funds, which mutual funds right now range between a 6 to a 10% interest rate. Let's be honest, it's an amazing interest rate right now. You have a bank giving you like 0.001% interest, and this is giving you between a 6 to a 10. But the amazing thing about a 529 also is that this money can only, remember how Donna was like, hey, can you put limitations on how can they take it out and have access to this? This money can only be taken out for education reasons. If it's not taken out for education reasons, guess what? Louis, you take the money back.
I got you.
I mean, I'm using you as an example, right? But
yes.
Louis, you take the money back in that. So it's a great thing because it's kind of a motivation. I like a lot of parents use it as a motivational, right? You have this amount of money in there, but guess what? You got to go to college, kid, because if not, you ain't touching it.
Right.
So it's okay, I want to touch that money. Let's make sure that I go to college and I get that proper education for myself.
Right.
529 just recently made changes this year, which did amplify a little bit of what they call education. So I wanted to share that out there. I'm be honest, the changes, I'm still learning a little bit about them because it happened like, I would say 10 days ago, because we just started a new year. But it's just expanding to community college. It's expanding to like all the different, right? It's not just like a 4-year college education, right? So it's just expanding it that way. But I can send information to anybody. I can send it to Donna, and Donna can forward it to anybody who's interested in learning a little bit more about that. But yes, we do have it literally is called college funding. 529 is called college funding plan.
Is there a combination? Suppose someone wants both. I want to use up that $1 Million Baby thing, but I also want to, before they become 18, I want to also provide something, like the 529. Is there a conversion to these two products or a combination? How does that?
So sadly, on this particular case, that because they're two different completely separate entities, from one being a life insurance and the other one being an investment offer plan, it cannot be combined. Could we combine different products within life insurance? 100%. And I can talk to you a little bit about that. But in this particular example that we were just using, it would be two different entities. What's completely.
You would have to buy both of them separately.
Exactly. You would have to, because you're supplying different amount of monies, right? The $1 million Viva, you're paying a certain amount monthly. But then the 529, you can put a chunk of money at the beginning, let that continue to gain interest, and then in 2 years, put another chunk of money into it, right? It's going to vary how you're funding the plan.
Okay.
But if you start early, Louis, if you start early with the child, the baby, it's cheaper.
It's cheaper.
Oh yeah.
And the which one? On the $1 million or the 529?
Both.
And
both because if you start early on a 529, you can put a certain amount of money, start seeing that compound and interest grow for you. And then as you continue to accumulate, you can then put more into it and fund it a little bit more, right? In the $1 million, you're buying since dirt cheap again, because they're so young, and that continues to stay the same for the rest of that period of time. So the younger you start, the better for you.
All right, awesome, cool.
I do want to pick up a little bit on what you just mentioned, like in the sense of like the combination of products that you could do, right? Because I think that's a very important factor, and I don't want to miss that opportunity that you just mentioned. And I know Donna's eyes were just like, "Ooh, that's a good one." Let's talk about that one. I know that, listen, I can go on a rampage and talk about insurance all day long, and we only have an hour, and I'm looking at the time, I'm like, oh God, 20 minutes. Okay, no pressure. But but there is at least one product that I do want to make sure that we discuss, and it's a great product to combine with anything else that anybody would consider getting, right? And that is, and I don't know if Donna's thinking the same thing that I'm thinking right now, but that is something called critical illness. Okay. Yes. So critical illness for us, not all companies offer it. We are one of the few companies that do offer it. And critical illness is a policy that includes cancer, Alzheimer's. So it's a policy that includes a lot of different conditions that are affecting in today's society, right? I mean, I know my family already has Alzheimer's in our DNA, right? My great grandmother had it. My grandmother is on it. So I know that that's something that I need to take seriously. And the cost of Alzheimer's is expensive. Cancer is another one that's obviously something that costs a lot of money. So the critical illness is something that you can bundle with any product that Mutual of Omaha has to offer. And when I'm saying critical illness is also cheap, I have one and I pay $10 a month. And I'm insured for $15,000 in case I ever needed to pay medical bills, pay anything regarding those type of conditions. I'm good to go and it doesn't have to come out of pocket.
Awesome.
A wonderful product.
It's an amazing product. I have everybody in my family. I made sure everybody in my family got it. Because again, it runs in my family, it runs in my DNA, all these conditions. Yeah. So it's such a costly sickness that we need to make sure that it doesn't completely take a toll on our daily life and our daily maintenance of living expenses, right? That's kind of the basics of why we do what we do, is that as something like this happens in our life, at least we can still pay all our bills and everything maintains the same without it taking a big hit on our finances. So that's why these products help us as much. So critical illness is something that we bundle with any type of product that we offer, because the difference in what you're going to pay, it's about $10, but you have this additional policy added to it. I'm saying, and by the way, I want to make sure I'm saying $10. That's my example. For everybody, it could look different. I have a friend that it was 7, and for another friend, it was 13. Right? Again, it's gonna be different based on age and certain criterias. But I just want everybody to know that it's out there, that it exists.
Right.
What do you think about it, Donna? You did. I know you like this product a lot.
Yeah, I like it because, you know, I've seen people with cancer, you know, having to take time off or needing care, etc., and having to push to go to work just because they didn't have any reserves, and they had to.
Yeah, can't afford to take that day off.
Yeah,
100%.
To be able to pull money, even you know, to help. I think it's just, yeah, it's a wonderful thing.
It is.
And for those listeners out there, of course for myself, but who have not got the chance to know, I don't know anything about insurance. Is there an upfront cost for it, rather than, I mean, apart from the monthly, yes, you have to pay, but is there an upfront cost? And what about credit and background in order to get started on these things? How do you work with that with this policy?
So I will tell you this, there's no upfront cost to insurance. There really isn't. It's just, if you sign on that dotted line and you want to continue to move forward, what you will be charged would be that monthly premium, right? Everybody's like, oh, well, you're charging me since this moment. I'm like, well, you signed since this moment, so your policy is already in effect, right? But there is not an upfront charge to it. When it comes to questions that you are asked regarding your background, yes, there are certain questions that you're asked, but to be honest, I'll give you an example. One of the questions that are asked has to do more with your driving, your driving reports. I know that everybody's like a little bit sometimes shocked by that one, but the reality is that if you have a lot of tickets, if you've been pulled over a lot and that kind of stuff, for an insurance company and their mentality, they're thinking, you have a very light foot, you have a heavy foot, huh? You like to go fast and drive, you might be a risk on the streets. So
and that's considered a rating, Louis. So you're going to get rated based on male or female, age, and your risk in your life.
Yes. But those are questions that as a financial advisor, Donna will sit down and kind of do with you, right, and walk you through it. But it's not something that's going to make it like in the sense of like a decline that you won't be accepted and you won't have an insurance opportunity. It just might make a difference in the cost of it.
Awesome.
And of course, they will want a medical background. They're going to ask and they're going to check, right? They're going to check. They're going to check with your doctor. They're going to check with the reports, the medical reports bureau, and to see, first of all, they're going to just ask you, what prescription are you on? With alone, they can tell what it is you're being diagnosed with. It may be not a factor, it may be. So, that's why each case is so unique, because you may be on high blood pressure, high cholesterol, someone else, so it's a case by case, but it's definitely, it's important because you are now, and as minority groups, Hispanics, we don't really build wealth. We just kind of steer away, and then generation after generation, nothing is left for our families. And I think it's important that we set ourselves up where we have these important talks, and even look at something like the cancer plans that, or critical illness, that could wipe out your savings, or your 401, like that.
Yep.
We have to be a little bit more proactive, and on that business side and educational side, a little bit more financial education, so we can get ahead and we can leave something for our children and generations to come.
100%. And I think that, adding to Donna's comment, I would adamant be having to say that two of the other really important products that we offer that not a lot of other companies out there offer, it's one called disability and the other one called long-term care. I'm a big fan of both, but I'll be honest with you, one of the biggest ones that I'm a fan of is long-term care. And particularly because I think that it's something that we're aware of, but we're like, hold up, what's happening? I have to think about that right now. And I'm 30 something, I'm 40 something, but years are going up really quickly. Right now, we're living for a longer period of time, but we're not living in the best conditions, right? Alzheimer's, diabetes, everything's taking control into our bodies. So a lot of people are going into like having to pay for private nurses, or having to go to a home, or having to have someone in your family sacrifice their time and have to stop working and have to stop providing income for their family because they have to take care of you, right? So long-term care is a product that assesses the needs of that and really guides people to make sure that if that happens to you, guess what? You're using the long-term care money policy to pay for that home, to pay for that nurse, to pay for that taking care of you. Florida, it's a big hit. We are retirement center in that sense, but in the Caribbean, it's something that needs to be thought about and talked about. My grandmother right now is going through it, and my mom is retired, thank God, but if she wasn't,
Right.
between medication, between nurses, and between everything, we're talking about almost $4,000 a month.
Yeah.
And not everybody can maintain that. Not everybody can afford that. So long-term care is a product that anybody should be thinking about. Doesn't matter your age, you should be talking about that as well. I know Donna's like,
Yeah.
I know that this is needed.
Yeah, and the wonderful thing about Mutual of Omaha is all of the range, right? Medicare, you know, you guys offer
Dental, vision, Medicare,
yeah,
term care, disability, term life. Again, the wide range of products to be able to
Right.
help our clients. It's, if we don't have it, we will find it. There has to be something to be able to help you and be able to guide you correctly to make sure that you're set up properly, right? We'll have a conversation with you and we'll talk about your finance, past, present, and future, so we can kind of guide you and see your need and kind of break it down for you in that sense.
and I know we're not going to touch much on final expenses, but you know, that's kind of like for those individuals that wait, or you know, very, very late in life, and now the health issues is so great, they're going to be limited. So that's what we always say, get things early before you get sick and sicker,
Yeah.
because then now you're going to be limited, but at least you're still going to have some coverage for burial expenses.
That's the cost of it. Yes, the burial expense. Yes.
Can you touch base on the shareholder? Will you be, once you get a policy, you mentioned earlier on at the beginning, you also get shares in the company, or you become, explain how that works.
So when I said shareholder, I meant it more in the sense of like you have a vote and a say
Right.
on who selected a CEO of the company, what is happening within the company. The company within itself doesn't have shareholders to give because it's not a public company, it's a private. But what we do is that it allows you to give an opinion and voice on what are selected throughout the company. So every single year, like I get a letter and it's like, this is going to be continue to be the CEO. If he's been doing this and this and this and this. Are you okay with it? Yes or no? If not, do you have a recommendation, or who would you want it to be, right? But all those decisions have an impact on the products that we can offer, as well as basically the cost of it as well, right? And again, going back to the comment that I mentioned, us being a mutualistic company, as the cost of it continues to go down, anybody who bought a life insurance policy is awarded that benefit as well. Right? So as we continue to perform better as a company and continue to go up in the Fortune 500 company, our policies get cheaper. And it's not just for new people buying. It means that anybody who already had a policy within us, your cost just decreased as well.
Awesome. Good.
And I know one thing, because you are a financial advisor for one.
Love 401ks. Those are my babies. Those are everything that that is my focus.
Because we do have, you know, some business owners, small business owners. How would someone like that benefit?
Listen, 401ks is a big thing right now. 401ks is a big thing always. And it's your retirement plan and what you're offering your employees, right? As business owners, a 401k benefits you in 3 different ways. The first thing is employee retention. Right now in today's society, we're living as how can we make sure that these employees continue to work with us? Because, you know, since COVID, things have definitely changed in people's mentalities.
Right.
So 401ks offering them that type of benefit, it retains your employees because you're providing an additional benefit for retirement, right? The second biggest benefit has to do for your employees, but for you as well, regarding taxes. Taxes are a big thing, people, and life insurance as well as 401ks assist you with your tax cost. If you are offering a 401k benefit, you're not only deducting taxes on a personal level because of your contribution, but as an employer, by offering a 401k, now you're deducting it as a corporation as well. So it helps you get money back from the government if that's the case, right? And the third thing, it has to do with just benefits in general on the compounding effect, right? A 401k is one of the most secure, and I use quotations just for, because, you know, when it comes to investments, nothing else 100% guaranteed, but it's one of the most secured investments to have, because you're investing in something called a mutual fund, which is a diversification of a lot of different companies, not just one fund. So it allows you to be able to invest, put money away, save money for retirement, but by also having that compounding effect of making interest. 401ks right now are a big thing. We actually just got 2 different McDonald's operators to get their 401k through us. And we're talking about 700 employees that are coming and joining us. But and you're talking about people who are making $10 an hour, $8 an hour, but every single person is participating in their 401k because they understand the value behind it, because they're like, everybody's living paycheck to paycheck. We need to make sure that we're putting money away to be able to live comfortably at the end of that retirement age, right? I used to run Chiquita, Fresh Express, and SeaWorld's 401k as well. Ripley's, believe it or not, every single company right now is focusing on offering these type of benefits for all the 3 reasons, the 3 reasons I just mentioned to you. So if there's any business owners right now that are considering offering that type of benefit to their employers, I would suggest definitely reaching out to Donna. She'll reach out to us and we'll guide you through it. But it is an amazing benefit right now to offer. I can't stress that enough right now.
Yeah, because we know sometimes that small business feel like they can't offer much and they don't know where to start. So again, this is one of the many reasons that I was like, oh my God, Mutual of Omaha is like a one-stop shop. And I
love that comment, Donna, because it's like, oh my God, you small business owners, you think I have to have 200 employees, I have to have 100. No. If you have more than 2 employees, which means you and 1 more, we can get this started. We can get this started. And it honestly, when it comes to cost, which is also something that people are always thinking, it's going to cost me a lot. It actually is not. And again, you're going to be able to deduct it from your taxes. So it ends up being a benefit for you anyway.
Yeah. And for those people, as we wrap up, and we'll see if there are any questions, how do you feel about annuity for those individuals now they're retiring, they have, you know, or they're transferring and they've got money that needs to, you know.
Listen, annuities right now are one of the hottest topics out there when it comes to any type of insurance investment products out there. And the reason why is because, again, interest rates are so high, right? There's so much happening in the economy as in today that when you're putting money into an annuity, you're guaranteed, I mean, at least if it's a fixed annuity, right? You're guaranteed that percentage for a period of time. Right now, Mutual of Omaha is offering a fixed annuity of 4.6 for 5 years. 4.6 interest rate for 5 years. Again, let's go back to how much a bank's giving you, how much a CD is offering you. It ain't going that high. It's not going that high. And the annuities obviously has some restrictions, yes, because you're not supposed to touch this money during those 5 years. But you are allowed to take about 10% out each year if you have anything that occurs. So you still have that flexibility of, oh my God, something happened. Let me take 10% out of that and it won't be penalized. So keep that in mind. We right now, the Mutual of Omaha has 4.6, and every month it's starting to change and adjust. But right now the average is about a 4.6, and that's an amazing interest rate to have. The paperwork is super simple. And it guarantees you for 5 years. There's one for 7 as well, just in case, but it guarantees that for you for that money. So anybody close to retirement that just wants to, if you're putting money away in a savings account and don't think you're going to touch it, might as well put it in an annuity. Don't touch it and let that make money for you. Let your money work for you, not against you.
Yeah, because some people are also coming out, getting a pension, and
they're not knowing what to do with it. They don't know where to put it. And then you're putting it in a savings account and it's not really making that much for you. So you might as well put it in an annuity or anything like that, that will continue to get that interest rate for you.
All right. Wow. So awesome information. Athea, Humaida, any questions?
I feel like
Hi everyone. Thank you. No, at this time, I mean, awesome information, everything, that you've been sharing, it's all good, and it's all about the education process. It is an education process, sharing the information. And I was like, Sonja said, our Caribbean people need to know so much about building wealth. We always have that fear factor when we hear insurance, we run the other side because we think about death, but it's no longer to be meant like that. You can benefit so much while you are living. So based on that, yep, absolutely.
Thank you, love it.
Yeah.
Thank you. I see a few other, okay, Athea says no questions. Good. So I know Athea is also affiliated with a local church, so I'm sure we'll probably coordinate something, to do, like Lois mentioned, got to get out there in the churches, in the communities, and and spread this word, because as of today, we see it on social media, GoFundMes. So it's not like it's stopped, right?
Exactly.
We see it, that people are still requesting to bury their loved ones, and it's sad. It's so sad. And I'm like, but you have to also take responsibility too, to say, let's talk about this, let's see what we can do, find out what the options are. So we as adults have to have some responsibility to protect our families, while we're here and even after we're gone. That's how I look at it. We love them enough. We're gonna have to protect them here and after. So just amazing. Thank you so much, Sonja. Louis, any last words?
Yeah, a good session, Sonja.
Thank you, Louis. Appreciate it.
Yeah, it was good. I have been trying to catch up with some information like this, and I wanted to make sure we're here today to absorb what you have, and so it was right on point. So we thank you for your time.
Absolutely, here to help. Honestly, you could talk about it for I don't know how many more hours, but I got it.
It's Valentine's weekend, and then again, we appreciate you taking that time out again to share. This is being streamed live on Caribbean American Diaspora on Facebook, and so it's there to save. A lot of times, or people will come back and they'll just re-watch it and so forth. So I think we covered just a lot of the good thing is, a company like Mutual of Omaha, we were able to cover so many products. So we are here to sit down with you, go over your needs. You may not need one thing, you may be interested in another thing. Go over your budget to try to match. That's what it's about. We, here on Caribbean Diaspora Vibez, it's all about education, and we are community advocates. So everything that I do is all about being an advocate for the community, myself, my family, but for families near and far. So we are here to guide you. If you've got questions, questions that I can't answer, obviously Sonja is there with her wealth of knowledge on certain products to guide you. So give us message us. My number is 407-810-6520, but obviously you can message us on any questions that you have. And with that, it is 7:01. We say God bless you, everyone.
Yes, thank you.
Happy Valentine's. Be safe, and see you next week.
Bye, everybody.
Guys, appreciate it. Let's take it to the Caribbean a little bit. Have a good night, everybody.